What's going on, guys? Benny Childs, founder of the Teach Me the Fish Effects trading community, back with another market outlook for the micro NASDAQ index futures. So, hope y'all are doing well. We're gonna go ahead and hop right into it. Let's go ahead and take a look at the high impact news coming out for this week. Um, We can see starting Tuesday at 9:45, we're going to get our injection of our high impact news. So we have high impact news on Tuesday, Wednesday, Thursday, and Friday. I'm going to draw your attention to Thursday, 8:30 news. Um, since we have news, this is our first 8:30 news for the week. Probably going to be looking for a weekly reversal sometime on Thursday. But we'll see how that plays out. All right, let's take a look and see what we have here on our monthly. All right, so here on the monthly, uh, the very first thing that I typically do is draw out my dealing range. All right, and that's basically going to be from sweep of liquidity to sweep of liquidity, or the most recent high or low. So our dealing range for on the monthly will be from Monday, October 3rd, low, to Friday. Sorry about that. I'm outside and it's raining. Anyway, to this high here on the Friday, March 1st candle. That's going to give us a monthly um, bullish dealing range equilibrium of $14,596.50. All right, so we'll be looking on the monthly to trade to or past the equilibrium here. Just gonna go ahead and pull up my Outlook notes. All right. So what do we see here on the monthly? We see that the monthly has taken external range liquidity, which could be a sign that we're in a sell program. So um, here is, let's do it here. Here is our external range liquidity here. All right, it was taken here. All right. Um, And as I was stating, this could be a sign of our sell program. However, we can't confirm this unless April's candle creates a change in state of delivery. So we would need April's candle to close below March's candle to signal a possible sell program with that change in state of delivery. All right. Now, if the monthly dealing range, right, has correctly been defined, we'll see, we could possibly see a trade down to or past, again, the $14,196.50 monthly bullish dealer range equilibrium. All right. So that's what we see here on the monthly. And I have charted out a fair value gap as well as a monthly breaker that we could see the monthly trade down to. All right, let's take a look at the weekly. All right, so now here we are on the weekly. All right, so this is what I have outlined here on the weekly. All right, so we see that the weekly has taken external range liquidity inside of this liquidated fair value gap right here. Now, I believe that we may seek premium internal range liquidity in this weekly bearish volume imbalance. And that is only if the weekly price range, which starts at the high of the Monday, March 18th candle to the low of the Monday, April 15th candle. Okay. Um, so if that is the proper defined price range, we could see it traded up into here. We do see that our weekly price range equilibrium is sitting at $17,911.25. And that volume about imbalance is up above that. So we could see it trade into there in order to head lower. Now, we see that it did take external range liquidity, and the reason why I chose it as external range liquidity instead of internal range liquidity for this weekly fair value gap is because the weekly fair value gap had already been tapped into. Okay, it's already been liquidated. Now, it has not been fully balanced or rebalanced, but it has already been liquidated. So that's why I'm looking at this as a external range liquidity sweep and not internal range liquidity. All right. Now, as far as the draw on liquidity, all right, the initial draw on liquidity, I am looking at $17,113.75. So when the market opens up, we could see it tap down and go ahead and take that push up and then, go ahead and push down. All right, to grab these other draws on liquidity right here. Okay. All right. Now, I do have our weekly bullish draw on liquidity, or excuse me, dealing range equilibrium at $16,422.50. All right. So I am looking for the weekly to at least trade down to or past this price point. Okay. All right. Now let's take a look at the daily, as ICT would say, the daily lipstick. Okay. All right. Now my notes here on the daily, I have that the daily has taken internal range liquidity inside of a fresh daily bullish unicorn breaker. All right, that will be this breaker right here on the Wednesday, December 27th candle. Okay, now we did tap into that. All right, so because we tapped into that, I'm looking for external, right? External range liquidity to be taken, and that would be the $18,519.25. All right. Now we do have a daily bearish dealing range equilibrium at $17,911.25. So I am looking for the daily to trade back up to or past um, this price point before heading down further. All right. Um, As far as the daily, I believe that it may seek premium external range liquidity again at $18,519.25. Um, and we could possibly see that do that to liquidate the lower uni to satisfy initial weekly drawn liquidity. My apologies, guys. Um, we could possibly see the daily trade down into this breaker block before heading up. All right. And if it does that, then it will satisfy this initial draw on liquidity. All right. So we could see it again find support in this lower unicorn breaker. Uh, to gain some fuel, to gain some liquidity before riding up here. And again, we do have our weekly volume imbalance right here. Now, overall, I do believe that the market will trade down to or past the weekly bullish dealing range equilibrium at $16,422.50. So basically, how the I believe that overall price is trying to get at least down to the $16,422.50 weekly dealing range equilibrium. Let's take a look at the monthly really quick. Where is that monthly? All right. So yeah, if this is the correct dealing range on the monthly, we could even see it trade lower there. But at least here on the weekly, so I typically like to frame the algorithm based on the weekly time frame. I am at least looking for it to get down to $16,422.50 overall. When that is going to happen, I do not know. All right, so for all right for again for this week. All right, I want to see this weekly sell side drawn liquidity at 17,113.75 swept. All right, and then I want to see price traded up to this weekly fair value gap, or at least to this weekly price range equilibrium. Again, that is if the price range will be defined with last week's candle being the low. Okay, so we may have to make some adjustments as the market comes in and trades. But that's what I always tell you guys. Hey, trade what the algorithm is giving you. All right. With that being said, let's take a look at the 1 minute really quick at a trade that was initiated. All right. All right, guys. So we see here that on the 1 minute, a breaker was formed. We have this high sweep of liquidity and then a break of the high that swept the liquidity. The last up close bullish candle would be the breaker. All right. And let me adjust this really. Your entry would have been on this breaker, which we did get. All right. Stop loss would be below the swing low. All right. And you would target this buy side liquidity. Now, I would probably target this fair value gap just to get a 2R, but you're only missing like zero point zero 0.02 points, right? So you're only missing like 2 cents, okay? But you can aim here, all right, and get that 2R. So this is, when the market closed, this was the current um, trade in motion. Okay, this was the current buy side or buy program in motion. And again, we could see it trade a little bit higher. Let's take a look at the daily. Yeah, we could see it trade a little bit higher once this completes, or it could just totally abandon it and go ahead and initiate the algorithm for this upcoming week. So. Uh, man, that is going to be my weekly outlook for this upcoming week. I hope this has been helpful and insightful for you all. Please feel free to drop a comment below, ask any questions, critique anything. Let's have healthy conversation about trading. And as always, I hope you all stay well and safe trading to you. Bye.